everyone. Dave Velasquez here with you with TransparentTradingSolutions.com. Welcome back, everybody, back on YouTube with today's lesson, today's topic, which is a very widely discussed topic on Wall Street, and that is rotation. Rotation among stocks, sectors, and so forth, much discussed in the media. So let me explain what that simply means. So rotation is simply that we are underneath the surface where you see the S&P possibly making a new high. I think we just made a new high yesterday as I record this. That kind of belies what's going on underneath the surface. What's going on underneath the surface is you have basically two markets. You have growth versus value. High-flying tech stocks have literally been crushed over the last 3-4 months. Stocks like Zoom would be a good one that's popular. Tesla even. Very popular stocks that are down anywhere between 20, 30, 40, and in some cases, Fastly, 55%, DocuSign. I can go on and just give you a bunch of names. So those are the stocks that have really been hit very, very hard. That's because they ran up too much. They don't have any earnings. They're all basically traded on prospects of earnings after COVID hit. They were the stay-at-home, work-anywhere kind of stocks. So, because they became so overvalued, they became sources of cash for a lot of institutions that got in early. And so what they do is they basically raise cash from selling those stocks and went and turned around and bought some of the value stocks, which are stocks that nobody liked back in the fall, which would have been energies, commodity-related stocks like Freeport-McMoRan. Those stocks have actually done tremendously. In banks have done tremendously well. So those are in the value category. The Caterpillars and those type of stocks, which a lot of the young people aren't really that familiar with. They're more interested in the high flyers, and so that's what's going on underneath the surface of the market. So how do we deal with this type of dynamic in the market? It comes back to basically understanding charts and knowing to not chase the stocks that are already, very crowded. In other words, there's a lot of longs in those stocks. Remember that when everybody has bought those stocks, when they sell off, they're going to get sold, and you need somebody on the other side of this trade. So what's going on under the surface is a lot of these stocks are kind of, institutions are going back and forth between these sectors, regardless of where the averages are. Remember, the averages are only driven by a few stocks, and on any given day, one or two stocks can really impact the averages. So, the takeaway is to stick to your charts, stick to buying stocks when they're down or when they've pulled back dramatically, and sell them when they're high. And you need a process and a method to do that. I would tell you, I just talked to my members this today, in fact, and we are now starting to look at those stocks that have been really beaten up. Fastly, all these stocks. If you take a chart of even just, again, give you two popular names that everybody obviously might be familiar with. If you go and put a chart side by side of JP Morgan Chase and Tesla, or Tesla, another one that may be not so familiar with you guys is FCX, Freeport-McMoRan, which is a copper miner. And you put those charts side by side, it's really a contrast in price action. One has been, one peaked about, 3-4 months ago. The other one bottomed about 7 months ago, and they've been going in the opposite direction. And so what you guys have to do as traders and investors is look at these stocks on their own, stick to this whole method of buying low, selling high, which I guess can be difficult, but that's really the takeaway here. And a lot of that is going on, and it's very confusing to people because you read the news every day or you watch the media and you notice that, the averages are going up, or the S&P, in fact, just made a new high 2 days ago. The Dow just made a new high 2 days ago. And you're sitting with all these stocks wondering what the heck's going on. So going forward, I would suggest that you guys look at your charts, always look at what those themes are. And in fact, when everybody's touting a specific stock, make sure you are looking to sell it And when everybody basically has given up on a stock, that's generally when you have a bargain, you have a discount to that stock, and that's when you typically want to buy. Okay, so I hope this helps. Listen to, make sure you subscribe to the channel, and I will be doing a lot more of these in coming weeks. Okay, take care, everybody. Have a great rest of your day, and I'll talk to you soon.